You have a good strategy in the market. You know the perfect entries in the market. Yet you cannot pass your challenge phase and cannot get your payout. So there might be several reasons, but today we'll talk about one of the most important reason, and that is overtrading. The majority of the traders, they are working in the market since many years ago. They have a good strategy. Their performance is completely good. But when it comes to overtrading, they cannot control their emotions and they become fail. So let's try to fix it. Let's talk about the technical analysis and the mistakes traders actually do on charts before they jump into overtrading. So the first mistake is that the majority of the traders, they cannot wait patiently for the levels they draw. Let's say a trader draw their support level on higher time frame. So what he do, he cannot wait patiently for this level. So let's say market is already here and he is checking market on low time frame again and again, and whenever he see any green candle, he jump into the market, and here his stop loss is here, and he already hit stop loss. So for the next trade, what he think that market is already on my support level, so let's try to get into the another trade. So let's say he hit stop loss on the another trade too, because sometimes market doesn't respect your support or resistance level. So if he hits stop loss on the second trade too, or trading starts here, because the majority of the traders, they are not psychologically so strong to control their emotions. The first mistakes you need to avoid that you need to be patient for the levels you draw on the market. Now let's talk about the second mistake. The majority of the traders, they are trading according to the liquidity zone. Let's say this is the support level and market is coming below this support level to take the liquidity. So all I will suggest for you is to wait for at least one green candle on lower time frame, and then you can enter into the market. Let's say this is the support level on 30-minute time frame and market is coming below this support level to take the liquidity. So all I will suggest for you to wait for at least one green candle on 5-minute or 15-minute time frame, and after that you can enter into the market, because whenever market is coming to take the liquidity below any support or resistance level, so there is a heavy chance that market can make a spikes and you can hit your stop loss. But if you are waiting for at least one green candle, your stop loss can be protected. So how the trading starts here? If you are trading according to the liquidity zone, let's say this is the support level and market is coming below this support zone to take the liquidity. Some traders enter here, they try to enter here, and they hit their stop losses again and again and lose their money. So you need to avoid these mistakes if you are trading according to the liquidity zone. And the third mistake is that the majority of the traders, they are trading in the wrong session. Let's say there is a currency that is correlated with the US dollar. So the perfect time for that currency is either New York session or London New York session overlap. Other than this, if you are trading that currencies in Asian session, so the volume in that currencies is completely dead and you cannot predict market perfectly, and they cannot respect your prediction. And sometimes market becomes sideways and your psychology is completely disturbed. The only way to protect your psychology is to trade that currency in their own session, because the market sometimes becomes sideways, the market sometimes hit your stop loss, your psychology is completely disturbed.